I invite our keynote speaker, Mr. Nikhil Kulabkar, Associate Director at Edelweiss Gallagher Insurance Brokers Ltd. Very welcome, sir. The speakers. I invite Mr. Nikhil Kulabkar, Associate Director at Edelweiss Gallagher Insurance Brokers Ltd. Also, we would like to invite Mr. Darshan, Parikh, Senior Vice President, Facultative Insurance and Marine Practices Leader, Marsh, India. Very welcome, sir. Can we have a round of applause for them, please? Also, we have Mr. Keyur Gandhi, Regulatory and Legal Affairs, Dhruva Space. So, please. Looking forward to an interactive session here. I'll leave the session to the chair, Ms. Dr. Nathan, please.
All right. Good morning. Yeah, I think it's working. Great. So thank you for joining for this session. So innovative approaches to insurance, which insurance innovation. Okay, that sounds a very provocative title. That sounds a lot of interesting debate. How are we going to do it? So my name is Nathan Ruiter. I'm managing director at Euroconsult. We're a consulting firm. We don't do anything in insurance, but we happen to work with different kind of projects where insurance is part of it, and it's definitely an important topic. But how we want to run this morning, we have about an hour or so. So we first have a keynote address from Mr. Nikhil here. He's going to give us a bit of an overview. Then we'll give each of the other speakers to again have introduced themselves, the company they're representing, and as well maybe a few comments. Maybe they disagree with Mr. Nikhil is going to explain to us in a few minutes. And then we go into Q&A, and as well in Q&A, if you have any questions, feel free to raise your hand, and we'll happy to take your questions along the way. And otherwise, we'll have enough to discuss. So, sir, maybe you want to go up and do the presentation.
Good morning, everyone. Thank you, Chair. So basically, we are doing this session to generate knowledge about space insurance among the fraternity, because a lot of time we have seen that people get confused when we say space insurance and what we talk about. They get confused about who's the insurer, who's the reinsurer, and who's the broker around. So this particular session we are going to do to give you a guidance about who we are, what we do, and how we do it. So just to give you a background about what Gallagher offers, what Gallagher is about. Globally, we are the third largest broker so far as the insurance sector is concerned. We are listed in New York Stock Exchange, and we have revenues of $8.1 billion. From an aerospace practice perspective, we have a team of 370 aviation specialists globally, wherein we represent near about 6,000 clients, which obviously is across the sectors of aviation that comes from airlines, aerospace, general aviation, MROs, and space as well. From a space capabilities perspective, what we are talking about is the total combined experience of the entire team who just manages the space insurance part at Gallagher is more than 350 years. If we put together the experience of the entire team managing space, they have an experience of more than 350 years. We are spread across the globe, right from US to the central team in London. Then we have team in India and in Southeast Asia and Australia as well. Just a brief about myself. I'm the practice leader at Gallagher India for aviation and aerospace. I've been associated with the insurance industry for more than 18 years. And out of this 18 years, I can easily say that it's near about 10 years wherein I have spent in aviation sector as well. So these are the few topics which we are going to cover up today. We are going to talk about the basics of space insurance, the types of space-related insurances available, the market performance, space insurance procurement, what is the process which is followed to procure the space insurance, the technical information required by the underwriters. Right. So now we talk about who the insurance broker is. Normally, as I said previously, people get confused between when we say broker, they normally take it as if, we are the risk takers. Now, the main difference over here, what we want to make is that a broker is a person who is an entity who is negotiating on behalf of the insured with the reinsurance and the insurance fraternity to arrange for the most competitive terms and the widest coverage available. The risk which is being taken is by the reinsurers. I've just mentioned few of the main roles of the insurance broker over there, who negotiates the risk with underwriters on behalf of the insured, assists the customer in producing and presenting the technical information. This is more important so far as space is concerned because it's a technical subject and we need to have the know-how to talk with the underwriters, including the technical details of the launch and in-orbit phase. The main entities what we see in the market doing space internationally is Gallagher, Marsh, Aon, and Willis Towers Watson. Now, just to highlight a difference between the brokers. As I said, the brokers mainly are like Gallagher, Marsh, Aon, and Willis. On the underwriting side, the underwriters are mainly Munich Re, Elseco, Atrium, Fidelis, Star, Beasley, so on and so forth. Now, what does the underwriter do? Underwriter is the one who is insuring the risk. Technically, if I try to put it in financial terms, he's putting his capital behind you so that in case there is a loss, he is going to reimburse for the loss which the insured has suffered. He obviously will pay valid claims, which obviously, because insurance is technically termed as a legal contract. So whatever is agreed has been stated on the policy document which the insured has, which the broker would have prepared in negotiation with the underwriters and taking into consideration the requirements of the insured. So, the asset versus liability fight. The assets are defined as an item of property owned by a person or a company, which can be a satellite, a launch vehicle, or a spacecraft. And the liability is defined as the state of being legally responsible for something, which means that the liability insurance provides protection against claims resulting from injuries and damage to person and or property. Now, when we say liability, it's mostly considered as a third-party liability, that because of your act, if there is a damage to a third-party life or a property, then you as an insured are liable to reimburse to that third party. The types of space-related insurance available, the first-party property and the third-party property. The first-party property will mainly cover the pre-launch, launch, and in-orbit. And the third party will have liability occurring during launch, in-orbit, re-entry, spacecraft, products liability, insurance, so on and so forth. Now, if you see, I have just mentioned what is the limits of liability which are generally available in the market. When I'm saying that limit up to $500 million plus, that's the normal capacity which is available in the market. That someone wants to buy a limit of liability of $500 million, that's what is available. Now, obviously, there are various parameters when we come on to the limit of liability side, that not everyone in the market will get a $500 million. There will be certain stages wherein, the underwriters might come back and say that, no, I can't put in $500 million. The maximum what you can get under this is only $100 million or probably even $50 million. So this is an overview of how the insurance market has performed over the last decade. So if you see, the green bars are the ones of the premium which has been charged or collected from the market. The claims is the actual claims made during those years. And the blue line indicates the gross margin. Right? Now, the bar obviously is talking about the rolling profit for 3 years on an average. So what happens is, one loss in a decade can wipe out the entire profit which the underwriters would have made during the entire decade. So that's the variable which the underwriters carry. When we say that, sometimes we feel that the underwriter is charging on the higher side, but this is the reason why they keep up a particular gross up margin with them, because they know that one loss in the industry, not through a particular insured, but in the industry, one loss which occurs can wipe out the entire profit which they have made in the last 1 decade. These are the few space loss experiences which have majorly happened. We have just listed few which had happened in last 3 years odd, and we have listed down obviously the amount of claim which has been coming, the highest being of $225 million in 2022. 2023, yes, so far so good. We are seeing about $52 million roughly around in losses in the first 6 months. Now, the first thing what we prefer to do with all our insured, before we get into the negotiation for procurement of insurances, we sign an NDA. And this is a common thing which normally all the brokers do it across, because we understand that you are into a business which has a lot of confidentiality so far as your technology and progress is concerned. And we want to assure our clients that whatever we do, we always sign an NDA so that whatever information is shared is only utilized for that particular transaction purpose between us and the underwriters whenever we are discussing the risk with them. Broker of record. Now, this is the main thing what we want to highlight over here today, that it is always better as an insured that you first appoint your broker who is going to represent you into the marketplace. Unlike other, property insurance or marine insurance, we have seen in the marketplace that, normally the insured tends to send across his requirement to 5 brokers or 7 brokers and then ask them to go into the insurance market to bring in quotes. Now, in space insurance, normally what happens is that the quantity of underwriters who are available to underwrite a particular risk are very few. And all the brokers at the end of the day are going to the same underwriter. So if you give your RFP to 5 brokers and ask them to go into the market to bring in quotes, all those 5 brokers are going to approach same 20 reinsurers to get quotes. From an underwriter's perspective, what he would start thinking is that, look, this is a client which is asking 5 brokers to come to me asking for quotes, which means that he has to work on the same quote for 5 times. At the end of the day, what happens is he loses his interest on underwriting that risk, and he might just say that, okay, this is my rate, take it or leave it. The ideal scenario of getting a competitive quote from the market is that you authorize one broker, you select the broker on the merits, you authorize one broker to approach the market and give him the authority to approach all the markets, get you at least 4 or 5 options with the coverage and the premium which is being charged, and then you finalize the reinsurer which you want to go ahead with. And hence we say that the broker of record is the ultimate thing which you should first do before starting the transaction. The technical information required for space insurance, obviously there are a lot of things. Program overview, the pedigree, payload, platform, single point of failure, what is the salvage, the contracts have to be studied upon, because many times it does happen that if you sign a contract with your contractors and the third parties, wherein it's one-sided, tomorrow in case of a loss, it can be a situation wherein you are getting into a negative line because of the contracts which have been signed. So it is always important that you share those information with the brokers so that they can analyze the contracts before you reach into the signing stage. And obviously these are the technical information, few of the technical information which the underwriters ask for. As we go ahead, obviously, the underwriters tend to ask more technical questions based on the information which has been provided to them on stage 1. For launch vehicle and orbit, again the same thing, the launch service contract and the launch provider. the candidate launch vehicle and the satellite may be launched upon, the estimated launch period, identifying the co-passengers, backup launch vehicle, if applicable. What is the target orbit? What is the heritage of that launch vehicle? The other side is on the satellite operations part, the operator facilities and the experience, the timeline for launch through completion of in-orbit testing and commencement of service, and the contingency plans and facilities available in case of a failure. So these are just few of the highlighted points which the underwriters seek while putting up a quote. There can be 10 other questions also which can come up from the underwriters when we discuss with them. Satellite end of life, the space debris has become an important talking point over the last few years among the insurers and operators. The end of life disposal plan, the deorbit, graveyard orbit, or the lunar planetary strike. So this obviously becomes an important point because, as we say, the population is not only increasing on the Earth, it's also increasing in the space as well. We move on with the procurement process. So how to best approach the insurance market? As I said, through your chosen broker, establish a relationship with the key insurers through meetings and technical presentations. This is an important aspect because if you're developing a new technology, it is important that you sit across the key stakeholders and explain them how you're managing this new technology and how it is going to be fruitful to the industry. Then we create a tailored insurance policy for presentation to the insurers because at the end of the day, the wordings, the circumstances under which a claim would be paid or not depends on the policy document which has been agreed upon by all the parties. Generate competition amongst insurers in order to achieve the most competitive premium. Now, as I said previously that once you choose a broker, he can go to 3 underwriters who are the top ones or 4 underwriters who are the top rated ones, ask them to quote. Now, they know that it is only one broker who is having a BOR moving around in the market. So if I have to win this business, I have to be competitive while quoting it to him. And hence, they would tend to be more aggressive in quoting. Unlike if you appoint 3 brokers or 4 brokers to go into the market, then it is all a chance that they won't be quoting aggressively because they know that 4 brokers are going to approach them and they have to do the rework on the same quote again and again. Premium rating and negotiation factors becomes the ultimate goal for everyone. So the launch vehicle heritage, experience, and configuration comes into picture. Spacecraft heritage, redundancy, fuel power budget, margins. The profile of the customer also becomes important because the industry is so small that any loss occurring anywhere obviously gets recorded with the underwriters, and they are aware that any launch vehicle who has suffered losses continuously, they know the history of that launch vehicle. At the same point of time, any hostile payload which is going, if there are losses on a particular technology as well, they also get recorded with them. Then volume discount and the buying power. The more payload which is going up, yes, the sum insureds go up, but then the buying power also and the negotiation power also increases with it. If it's only one satellite which is going up, and if it is a smaller one, then the problem would be the underwriters would want to have a guaranteed minimum premium for that, for a particular launch. But if you have multiple satellites going through one launch, then obviously the bargaining power increases because the minimum premium remains the same, but it gets distributed over the number of satellites which are going with it. Then the commercial conditions of the market. If the market has suffered a large loss in the recent past, then there is all probability that the markets would tend to load the rates. And if, as I've shown in the previous slide, that if the market has not suffered any losses, if they have made money for last 4 or 5 years, they tend to be slightly soft in putting the rates on the file. And obviously the experience of the broker and the expertise also depends. Further on the premium rating and volatility, for conventional risk, rates are lower. However, there are large portion of new space risk which will demand higher rates from the insurers. New software-defined satellites, new manufacturers of satellites, new satellite types. Now, exponential growth in the LEO satellites, especially from startups, new launch vehicles, these are all driving the volatility in the market because the underwriters are not fully confident on the technology which is being used. They tend to load the premium. Now, we foresee that this would come down slowly over a period of time once the technology is proven and the startups also start gaining the heritage of launches. That's all we have for today. So, Nathan, probably we can jump onto the QA session.
Yeah.
Or we'll have a quick round of introduction for everyone.
Yeah, exactly. We'll do that. Thank you very much. Definitely a few follow-up questions about that for later discussion. But I would like to ask the other panelists, so maybe Darshan, if you can briefly introduce yourself, the company, and if you have any, you can do it right there.
Hello. Yeah. Good morning, everyone. Hi, I'm Darshan Parikh. I work with Marsh and McLennan. We are the world's largest insurance broker and risk consultant. Marsh and McLennan is part of the overall group, which has got 4 odd companies within that. One is Guy Carpenter and Marsh, which both work on the reinsurance and insurance consultancy perspective, while we've got Oliver Wyman and Mercer, which works on the HR perspective. So Marsh has been present in the space insurance for a longer period of time. I think we were the initial ones which started insuring the INSATs to GSATs, all of those from last 40 years old. So we work very closely with ISRO as well on a lot of all their launches. As rightly said by Nikhil, this is being a niche market. It's not that easy to get terms and conditions when 3 or 4 brokers are around in the market. So the best way to do it is, if you have the choice to go for 2 brokers, you can go, but make one of them the lead broker. So what happens is that the markets listen to that one individual, does all the placements, and the second broker can do the part placement as well. So that is also, we have seen in some of the instances, which we can work across. Secondly, space insurance is such that it requires a lot of data. And it's not like it's off-the-shelf product where rating is finalized and it's just going to give it out to you. So you need to start a bit well in advance kind of a thing. I was there last year in the Space Congress, and the same thing we had discussed that time. We've seen a lot of changes happening from that period to now. We are seeing many people coming at the advanced stage, talking to us, sharing the information, and that helps you to get a good price. Insurance is nothing else, because the guys who are sitting outside, they are just underwriters. As rightly said, they want to put their capital onto it. So what they want to know is the story. How good your risk is. What are the payloads? What are the technical specifications? What are your overall strengths and weaknesses? They want to see that. And on that basis, they will price it out. So as most of you would be knowing, whenever you go to a financial bank or something for saving interest, your rate interest would be similar, 6.5, 6.75. Maximum, the delta would be between the 50 basis points. But when it comes to insurance, it can change, because it's the information which you're providing, and that makes a big difference. So today, if you're going to provide your information as these are the details, these are my specification, you might tend to get a better rate, because the information is much valid. It's creating awareness to the insurer, and he's quite confident that I want to write something because I'm feeling that this risk is very good. So this is something which is very important whenever you are deciding in terms of selecting your broker and how do you make your overall story. As we said, as brokers and consultants, we not only look at pricing, but the most important thing is risk management, contract evaluations. We need to check how is your overall placement gonna be, and the most important is the claims resolution. If a claim comes in, what happens? So insurance is all good till the time there is no claim, but the moment the claim comes in, that's when the real service of either a broker or insurer comes into play. So that is very important from that perspective, that you select the individuals or the partners which you want to be associated with. See to that they handhold you right from the stage of contract evaluations till the final resolution of claim. Touch wood, we don't want claims here, but in case if it comes, then we need to be protected from that perspective. And if you ask me in terms of the market perspective, we feel that The market is changing. 2019, as shown by Nikhil, was a bad year where the markets lost money. 2021, COVID had an effect, so that's why there were not many launches and the pricing was okay. Then again, last year we saw the Russian space launch, which was taken away kind of a thing. So that made a big impact in creating something. And I think that was a perfect moment for India to step in. So we saw the likes of NSIL coming up with their commercial arm, which was it, and they launched with OneWeb, which was one of the biggest 36 satellites which was launched for them. That was a good step in for India, and that has brought India on a stage where now most of the overseas clients are looking at India as a launch perspective. So we were fortunate to ensure that ourselves, so which was very good for us overall from that perspective. And I think the future, as we all say, the next $1 trillion economy is not on Earth, it's on space, right? So we've got enough potential to do a lot of things. 100 startup plus already over the last 10 years kind of a thing. And with the new space reforms coming in, it's only going to make it better. I think the ambitious target of 10% growth which we have by 2030, I think it's quite possible with overall government funding and a lot of private equity coming into the play. So we as Marsh are always available as risk consultants, available to help you out in any of your placement related or any queries or any technical inputs you require from the overall perspective. And that's about it. I'm here later on, so in case any questions, I can take it forward. Thank you.
Thank you. Keyur.
Good morning, everyone. I'm Keyur Gandhi. I'm a lawyer and I work with Dhruva Space. I head up the regulatory vertical with Dhruva. First of all, thanks a lot for those wonderful presentations. It was quite informative. A little bit about Dhruva Space. We are a full stack space engineering company based out of Hyderabad. We are the first space tech startup in India. As of today, we've launched on 3 PSLV missions. We've launched 2 technology demonstration satellites, and we've also launched some payloads on PS4OP. I would like to shed some light on how does a startup look at insurance and risk management, right? With my good friends here, I've been conversing with them for quite a while now as Dhruva Space to understand how to manage third-party in-orbit liability, how to manage liability that you're taking on from customers, and where does it become material for a startup to look at insurance in a greater sense. With the background that we already have, that yes, the number of underwriters are scarce, the capacity available in the market is rather limited for a startup to avail. And as a startup, when you're launching missions, you're of course launching your satellites for the first time, you're executing commercial contracts for the first time, and you are liable to your customer if something fails. You need to launch the mission once again, or you need to invest in delivering that product once again. But for a startup, what that means is a halt on fundraising, loss of customer confidence, compromising on what is the next batch of revenue to come. So when we look at insurance, we look at it in the larger scheme of things of risk management as a company where we want to ensure that, okay, if I'm not able to live up to my expectations of the product's performance, or if, say, the cases are very rare, right, where third-party in-orbit liability will arise and will be proven, especially for satellites. As it is quite difficult to prove which damage or which debris or which space object really caused damage. When we look at these solutions, of course, around the theme of the session, which is innovation in the space insurance sector, as a startup, what I can say is, yes, it is a phase where we know that insurance will be much costlier. It's a phase where, like every other professional service provider, every other manufacturer, and every other downstream service provider, the insurance sector is also going through its learning curve, and there will be more people willing to invest very soon. But the challenges that we see from where we anticipate that some innovation may emerge soon is one, like I said, the challenge of enforcement. Today, if I'm insured, let us begin with third-party in-orbit liability. Today, if I'm insured and say there is some alleged damage which is caused by my space object to someone else's space object, the first thing that happens is two countries get involved. When two countries get involved in negotiating what is the actual damage, who caused it, in coming down to a figure that, okay, this is the actual damage, this is a never-ending process. This enforcement in itself is quite difficult, and it is a nightmare no matter which side of the table you're sitting on. In this, I think if you would recall, there was a slide of broker on record. So it's always your brokers who would know how to navigate through these situations. But as a lawyer, what I would say is this is evolving jurisprudence. Evolving jurisprudence, why? Because we don't have enough cases, or we don't have enough examples to go on with. And the difficulty of enforcement will always remain. But when I say difficulty of enforcement will remain, it also means that it might be a 2 million, 20 million, 200 million, or a 2 billion. That means it is equally unforeseeable. So as a startup, what we tend to focus more on is working with our partners to ensure that on the space operations side, on the mission planning and design side, we optimize as much as we can to eliminate risk. Coming to the second part, which is about a small satellite manufacturer operator being able to absorb the cost of insurance. We have been exploring many alternatives as to how to go about it, because for new technologies, if I'm not wrong, the premiums can often go up to 20-25% of the actual cost. In that case, how do you commercialize as a company while remaining safe? So for that, we've been exploring several programs, which is a mix of insurance, assurance, and working around with several other contractual terms. In summary, what I would like to put forth as an open question for everyone is, with the business being that of mitigating risk in a sector which is already too risky, where there is no set precedence or jurisprudence to determine how risk and liability is allocated outside usual commercial principles, what is really the scope of innovation which is possible in the space insurance sector? And I hope through our Q&A we can shed some more light on this subject.
Yeah, definitely a good point. Let's do that. So let's start a bit and have a bit of a discussion on a few things. So maybe first, Nikhil, you showed earlier that the 2019 was not a very good, you showed the volatility in the 2019. Was there something particular standing out, or is this kind of just multiple incidents that lead to that? First question. And then the second, what is then the market today? Did the rates go up, but it's now, it's a hard market or the soft market where we are looking today, right, from that event?
Thanks, Nathan. So just to highlight on the 2019 year, there was one satellite which was lost, costing $225 million. So what happens is, because the underwriters have paid $225 million, they would not have earned that amount of money in the last 5 years. So obviously, after 2019, there was a trend wherein the rates started going up. Now, having said that, if the losses continue over a period of a year, there can be a situation wherein the number of underwriters sitting in the market tend to withdraw from doing that line of insurance. Or to be more specific, they might tend to withdraw from the space insurance perspective. They might still do property, marine, or aviation, but they might not do space because of the losses which they would have suffered on their balance sheet because of one single loss coming in. Now, currently what we have seen is the rates have moderated, wherein they are still at a no profit, no loss situation, but they still want to continue with those line of business. Now, in this market condition, when you suddenly talk about a new technology or an innovation coming in place, there can be a situation wherein few of the risk takers or the underwriters would agree to take the risk, but at a higher cost and a limited participation on the risk. Once the technology gets proven in the marketplace, it's only then more number of players start getting attracted towards that risk by saying that, okay, it's a proven technology, we can follow what the lead underwriter has been doing. And that's a situation wherein we say that number of markets available to participate on the risk are more. On a new technology, it is important that we sit across the table with the underwriter, make them understand about the technology, take them on board, and then move forward. It helps a lot when we discuss with the underwriters to, cool the rates down. If the underwriter understands the risk what he's writing, then he's better prepared when he's going to give you the quote.
Just would like to expand a little bit on it. I think Nikhil has covered. Just a couple of points. Typically, whenever we do insurance, or as in reinsurance, you typically have a leader. The leader would have his own price, on basis of which a lot of follow markets would continue to follow the pricing. However, in space is a bit different. When it comes to reinsurance, there will be a leader who would have his price, but because of the claims and stuff which have happened in the past, I might not like to follow what the other leader has done. So I would offer my terms and conditions as per my understanding of the risk or my appetite and things. So what happens eventually is when you're doing a placement on 100% basis, you'll derive at a composite price. It won't not be a standard price. So this is an impact of overall claims which is happening. So to answer your question, Nathan, typically 2019, the bad year, thereafter, not much money coming in because of the 2020 COVID situation. So the market was on a bit of a hard side. So any new player who wanted to come in, who would like to dictate his own pricing kind of a thing. And if there is, it's the simple game of demand and supply. If you do not have enough supply, then you might have to compromise on the price and get what you get at the end of the day. So that's why, yes, right now, it's a good time. Not that bad, but as rightly said, new space, new technology coming in, not enough premium in the market as of now. So it will take time to build up the kitty, and then we can come up with a lot of more innovations into play.
Yeah, and I think, coming to your point and to the kind of the topic of the session as well, I think it's kind of clear how you all kind of well painted it. The old traditional way how space was done, you have empirical data, it's quite well understood. Now you have all these new technology developments, right? You have the new launchers. For sure, there will fail, a few of them, right? There's some statistics, but it's more difficult to understand. There's new technologies becoming available, and then there's also the overall principle, a bit from new space. You launch, you fail, you learn, and you launch again, right? So the pace of innovation. So maybe the first for you, Keyur, how do you see it as a startup company or maybe a new space company in the future? Do you think that insurance, maybe at one point, if you launch X many satellites every year, that it becomes less of an important, and you maybe do a portfolio approach rather than a single? How do you think? You told already that it's difficult in the market today, right? So, from your point of view, what needs to kind of change in the mindset from insurers, underwriters to make these products available for your needs today and in the future?
Okay. Okay, so I'll take it in two parts, today and in the future. Yeah. Today, to be fair, what we are essentially asking an insurer to do is take risk on our behalf. And let's come to the reality of it, that with all new space companies, there's a significant amount of risk associated. Today, I think one thing that could fundamentally help even technology demonstration missions or early missions to be covered under this regime was to see if there can be new methods to underwriting this risk, because at the end of the day, it's not just about protecting my liabilities, also about ensuring that other assets which are out there in space and other people in the commercial chain do remain protected. I'm not an expert to comment on how the underwriting bit is done, but I'm pretty sure with the evolving methods in which products are being made, tech transfers are being done, with new ways of new ways of being updated on SSA and STM data, with new ways of assessing redundancy systems in satellites, new ways to maneuver. This risk that is perceived can significantly be altered, and there can be some change to that effect. In terms of a long-term outlook on this, yes, we pretty much agree in terms of looking at it as a portfolio mechanism, because largely when we look at companies today, they have some set line of businesses that are evolving, be it manufacturing and providing payloads, be it providing hosted payload solutions, be it launching constellations of satellites or offering launches. And the portfolio approach is very helpful because if I know that my launch service provider, my payload provider, and my satellite platform provider, we're all covered under the same program, it helps establish some level of continuity because at the end of the day, my insurer and my underwriter would know that I am not equally protected from any potential liability or losses that may emerge from someone else in the supply chain. That is one perspective. Second is when we are looking at it as a business line, given how new space tech startups are working out to be commercial viability and sustenance will be key for the next decade or so. Because when we look at some typical examples of hosted payload service providers, IoT service providers, the revenue margins are very low because much like the insurance market, all of us are going through that cycle of the space tech enabled solutions being adopted into the market. So even a small liability that may arise in case my satellite underperforms or if I underperform in my delivery of services, that recognition of revenue is very important and that continued cash flow becomes very important. So that comes more into the territory of self-insurance or second-party insurance, not so much liability that is mandated under the regulatory regimes which are evolving. So from a long term, yes, my focus, I would say, would be on first self-insurance and second-party liability. I hope that answers the question.
So maybe if anyone want to comment about it too, but the other way I want to kind of ask and approach it as well is to kind of, and in other innovative ways you come up think of that, of course the space sector itself could also maybe, it's all about risk and understanding what is a risk portfolio. Now there are new solutions like either for like types like on the SSA side, right? In terms of liability or the space debris, there's, potentially new sensors being developed or new data becoming available. Do you think that kind of this kind of space data of kind of a service could be, if let's say a operator could demonstrate that they have an SSA policy or using active, that would be able to lower the rates or these kind of things? Is there a way, let's say, that, in order to kind of help reduce the premiums, if you, gain more information on, for example, on this debris mitigation, do you think that insurance would be open to this kind of thing and would be willing to pay, or other kind of types that you're able to kind of, how do you call that, incorporate that into their kind of analysis?
I think, yeah. So, yeah, rightly said, like, as both of us, when we started, risk management is one of the key things to insurance. Today, why do we do insurance? It's only for the things which can go wrong. That's the eventuality of it. But whenever I'm doing my risk tolerance method, I would look at the chances of happening, that's the likelihood, and the impact of it. Now, when we look at space, yes, if the likelihood of every mission going failure is not there, it's quite low. But then for a new startup, because there's no history, there is a possibility that the likelihood is very high. And the impact is also equally going to be high. So from that perspective, yes. But if you can showcase, as I mentioned earlier, a story needs to be built up for the insurer that what are your risk management. You mentioned about SSA policies in place. We have got a lot of investments in risk management. We as brokers also advise you in terms of the mitigation exercise or in terms of presenting your technical specifications in a way which can make your risk look much better. Then yes, the underwriter is there to reduce the price from that perspective. And he will just not, so the things which he don't understand, he has a system-driven price which comes out, but the more and more information you give him, that helps you to bring your premium down.
Any other ways you view?
No, I agree with what Darshan said, that the more information which you share with the underwriter is going to be more beneficial in getting the rates down. Yes, as Keyur said that, as you go as a group, then obviously the volume brings the rates down. But the more technical information on the new technology specifically, if it's a tried and tested technology, the underwriter will say that, okay, I know this technology, this works in this way, I'm fine with it. But on the new technology, it is always required that you sit in front of the underwriter, give him the technical details, the way he wants it, or the way he wants to look at it. Obviously, they have their actuarial science wherein they come out with their own rates, but that's the base rate what is being thrown to them by their systems. Based on the information provided by us and the specifics provided by us, then they negotiate within themselves on how do they, approach this and bring the rates further down. It's not that, blindly they would, put a particular percentage onto it and say that, okay, my rate is going to be 2% or 2.5%. There's obviously the way they have arrived at that 2% rate. But if we see that this 2% is still on the higher side and we want to bring it down, the best way is to sit in front of the underwriter, give him the technical information as much as he wants. If we try to withhold any information from them, then obviously, they are going to draw their feet back and say that, okay, with this kind of information, with the understanding what I have, this is the rate what best I can give.
Also to add on from the SSA perspective, right? So this was an interesting discussion that we were having a while back. It was a discussion between a few of us new space startups. We were talking about how do you decide when to maneuver and when to not maneuver? Because most of the new space tech startups would rely on something open source, much like US Spacecom or something as such. We wouldn't enter into more advanced solutions in the early phases because that is simply too complicated to handle at this stage. Why did I mention SSA especially? Because today whatever data comes on risk of collision on the TLEs, the two-line elements which you derive to understand where your spacecraft is headed, there's always some margin of error with it. And especially with the small satellites today, the kind of propulsion systems they carry, your ability to maneuver is probably within that margin of error. So there's no assurance that even after making that maneuver to avoid any potential collision or close approach, you will effectively be able to say that, okay, I have averted risk. In fact, it might be something much opposite, where you realize because you made the maneuver, there was a close approach or there was something that didn't go quite well. And SSA, as we see today with multi-sensor data fusion, with more ground-based and space-based radars being installed, we see the accuracy of this data coming up. And we also see that commercial service providers who are aggregators of these data are also entering into other domain of the services, which is doing more comprehensive risk management for satellite missions. With that evolving, the hope certainly is that, like you mentioned, more information available, the better it is to drive down premiums. The hope is certainly that we can move faster in that direction in the years to come.
Let me see if there are any audience questions. Yes, there are two.
Jeremy Rose. Jeremy Rose from Consist. Just two questions. First of all, how do you figure out whose piece of space junk caused the problem to your satellite? I mean, it doesn't have a label on it, does it?
Okay. So from, it's an enforcement challenge, certainly, like I was mentioning, because if there is indeed damage to a space object, the first challenge is to figure out how did the damage really happen. Today, there are pretty much only 2 or 3 ways that can happen. The first way that everyone goes back to is going back to their SSA provider or going back to anyone pretty much who has been cataloging all of the available data on debris and active objects, which for civilian use, to my knowledge today, is only available for objects which are bigger than 10 centimeters. So if it is anything below 10 centimeter, which might be a small piece of debris that disabled perhaps your EPS system or broke the antenna, it will be quite challenging or close to impossible to understand what really caused the damage. If it is something which is larger than 10 centimeters, then yes, there's a good possibility that you'll be able to trace it back to a debris or an active object. Now, if it is traced back to a debris, then hard luck, because there is not much support that's available in terms of claiming liability or damage against anyone. This is the SSA method. The second method, of course, that we are also exploring is to see you have defined catalog data of active satellites and active objects with both UNOSA, and you can also always go back to the ITU filings to see what kind of objects are currently in similar orbits, and you can run simulations. That is the second method. And the third method, which is not somewhat internationally followed or proven, but people do tend to fall back a lot on, is just continuously tracking which were the other satellites in the vicinity in your line of sight, which means if you're tracking data from a particular ground station, you would always know which satellites are coming into the close vicinity of having the same line of sight for data downlinking or TTNC purposes. That might help you narrow down the list, but might perhaps not give you an exact indication as to which space object it was. And one challenge that I would like to particularly highlight here, which we see a lot happening today, because the limitation of size of objects is 10 centimeters. Some of the satellites which are 1U or half U or even smaller, it is very difficult to trace those. So despite having access to data, SSA data and data of what orbits these satellites are currently in, it might become quite difficult to conclusively establish what exact space object it was that necessarily caused total or partial harm to a particular satellite. I hope that sheds some light.
Sorry, Darshan. So the second question, there's been some reports over the last few days. Viasat-3 that was launched a couple of weeks ago is doing some interesting maneuvers in space. It's like spinning around, and they're trying perhaps to shape something that should have been deployed as not being deployed. Have you heard any reports about what's going on there?
Yeah, we have heard of those reports, but as we said, it's too early to comment anything at this stage because no one is sure that what's actually going wrong with it. Now, if tomorrow it turns out that the deployment was into a wrong orbit or something failed on board over there, then obviously the first party, the satellite owner, would get his claim because there was a failure on deployment. So even to the first question also what Keyur was responding upon, that if there is a debris which is hitting into the satellite or into the sonar panel, what would happen is the underwriters will then analyze that what is the damage which has caused to the satellite now. There was a debris which came and hit. Obviously, we don't know whose debris it was. But from an insurance perspective, what the underwriters will be looking at is that what is the damage which has been done, what is the salvage available, and is there any course correction available to mitigate the situation and utilize the balance available satellite. If it is totally destroyed, then obviously it's a full loss which has to be paid.
So that's just to expand a little bit, like for insurance perspective, for us, we need to identify that what damage has happened because we are insuring that. Obviously, we would love to have a recourse. As insurers, they would love to have a recourse from someone. And with these methods, if you're projecting us saying that you would be able to identify, then yes, we could put a claim against them to recover that. But till the time we don't know, the insured will be getting his money for the claim which has happened to his asset.
Is there another question?
About the $500 million projected capacity, is that for the Indian marketplace launchers, or is that for worldwide launchers?
It's the worldwide.
And is that cumulative?
It's a cumulative.
Amount?
Cumulative amount of capacity which is available from all the underwriters who can write up a space risk. Now, that 500 can be deployed on Indian satellite launch, it can be deployed on Ariana, it can be deployed on SpaceX, everywhere.
Is there a plan to increase that? Because with New Glenn and Starship, even Ariane exceeded 500 million, and many missions that were in the $700 million range.
Yes. So what has happened is initially we had seen few years back that this capacity was close to 700, 750. But then it, as I said, that it keeps on varying depending on the underwriter's choice to deploy his capacity on a particular risk or not. So we know that on tried and tested methods that $500 million is something which is available. When you start increasing it from 500 to 700 or 750, that's where the actual struggle comes in, of making that underwriter agree to put a pen on the rates and the terms what we want to do it. Because we can't have a situation, as Darshan said, that there is a lead underwriter who has given his rates. There will be the follow markets who are going to give their rates. Now we, as a broker, have to ensure, even if the premium is separate, you know, someone has charged $100 and someone has charged $110, that's fine. But the terms and conditions on the policy have to be the same as agreed by all the markets. Otherwise, then when it comes to a settlement of a claim, there can be a dispute.
Thank you. Thank you, Tom. Yeah. No, it's kind of a good. Yeah, it's kind of a good thing. Actually, I think about two questions. We maybe need to. You want to have a question or? Yeah.
When I hear insurance, I hear accident, I hear malfunction, enough complexity already. But do we also have insurance coverage for a degraded performance of the payment? Is that also a part of the insurance model?
So just to answer that, yes, that's innovation which we can call about it. We have got some for the people who have been like the SpaceX and everyone who's got a good heritage and stuff, something called as a performance guarantee. So this kind of a cover is available, but yes, it requires a lot of data, a lot of information of the past history to come up and derive. Because again, as I said, the pricing has to be done perfectly for something like this, because yes, we have a performance guarantee. You might have 1, 2, 3 good launches. There could typically, if you've seen the graph of it, first 2, 3 are typically failures because we don't know. Then it goes into a perfect shape. Then again, 7, 8 is got a year which is down, and then the whole thing picks up kind of a thing. So having a good 10, 20 launches data, performance guarantee is a product which is available, which can be looked up into. Nikhil.
See, even the underwriters, what they would want to do is that if you ask for a performance guarantee on a new technology, they might not agree to it. But once you have some 7, 8 launches, 10 launches going on, then they would come up on a performance guarantee. Then obviously they will also try to agree with the market, and they would say that, okay, let's try to bring in some innovative cover. But if it's a new technology, you have hardly done 1 launch or 2 launches, they would not agree to it. Or even if they agree, they would come up with a very specified small limits. And obviously they would charge something which is, we say it, on the higher side.
All right. I know our time is almost up. I just wanted to follow up on one point. You know, as if you also pointed out, right? There's a lot of new assets coming to the market, being launched. You know, from let's say you know, satellite communications or observations, constellations. There's like space exploration. There's space logistics. So there's a lot of very expensive. A lot of money is spent, billions of dollars, in these new space assets. Do you think that the launch insurance or the insurance kind of capacity could be a bottleneck when we are looking at the 500 millions, maybe stretching it in the next 2-3 years? Or is it something that you believe insurance will be able to quickly adapt to this new environment that we're looking to get into very shortly?
Yeah, Nathan, that's a very good question, because this is what we've been discussing with most of the reinsurers as well, saying that now with new space coming into human system, everything, whichever you name it, SpaceX objects, what do you do? So the market is ready. It's slowly bringing in new capacities. So 500 million, which he's pointed out, yes, it's a good one. If you want to stretch out, we can do some innovations whereby we can do some excess placements also if required. But to answer your question, in the next 2-3 years, we can see the market is gearing up for this. And how it will help you is with these new space premiums coming into it without much claims going in. So if the kitty starts building up, we'll see many people going into it, because it's all about, it's like being the opportunistic perspective. Like when there was a war, some of the markets went away from it. But there were new markets who can come in because they realize there's a good money to be made in this, because the system is war, but there has not been a single claim coming into the picture. So same case with the new space. They are seeing that, yes, it's a good premium. There is a good opportunity with India being so many new startups. We're talking about SpaceX additional, I think, some 10,000 odd satellites to be coming. We are seeing a lot of new things advancing. Markets will be coming in. So this 500 to 750 can be filled up. It's not that it cannot be filled up, but I think it will take another 2-3 years before it can get into it.
All right, thank you. Unfortunately, we don't have more time. Standing very close to me now, I think I get the sign. So thank you, panelists, but please for the closing remarks.
Thank you, gentlemen. I guess it was a very cognitive discussion towards the cumulative progress of our space sector insurance. Thank you. Thank you for an interactive session. Thank you, panelists. And I guess we should ensure ourselves for the forthcoming sessions with a nice tea break now. So thank you, panelists. Thank you, Chair. Thank you, Dr. Nathan. The next session will resume at 12 noon.